Ladies and gentlemen, good day and welcome to the Arihant Superstructures Ltd Q4 and FY24 earnings conference call hosted by Ventura Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Tushar from Ventura Securities Ltd. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Ltd, I welcome you all to Arihant Superstructures Q4 and FY24 earnings conference call. The company is today represented by Mr. Parth Thakkar, Full-Time Director, and Mr. Dheeraj Jopat, Chief Financial Officer. I would now like to hand over the call to Mr. Parth Thakkar for his opening remarks. Thank you and over to you, sir.
Yeah, good morning everyone. Along with Dheeraj, we also have CMD Mr. Ashok Chhajer with us on the call. So good morning and thank you all for taking time to join Arihant Superstructures Ltd conference call for Q4 FY24 to discuss the results and business updates. We have seen that the Indian real estate sector continues its momentum across major metro cities in India, and we are excited to be part of this journey and have a leading position in the MMR region. I guess most of you would have gone through the stock exchanges. So I'll just brief you all about the financial numbers of this quarter. In terms of the consolidated financials, the total consolidated revenue for Q4 FY24 was 162 crores against 120 crores in Q3 FY24, registering a growth of 35%. The total consolidated EBITDA for Q4 FY24 stands at 36 crores as against 26 crores in Q3 FY24, registering a 37% growth on a quarter-on-quarter basis. The EBITDA margin for Q4 FY24 stands at 22.36% versus 21.94% in Q3 FY24, registering a change of 42 basis points. The profit after tax for Q4 FY24 stands at 22 crores against 16 crores in Q3 FY24, registering a 40.9% growth on a quarter-on-quarter basis. The PAT margin for Q4 FY24 stands at 13.55% against 13.02% in Q3 FY24. When we compare the FY24 figures to FY23 figures, the growth is as follows. The total consolidated revenue for FY24 was 511 crores against 391 crores in FY23, registering a growth of 30%. The total consolidated EBITDA for FY24 stands at 114 crores as against 79.8 crores in FY23, registering a growth of 43% on a year-on-year basis. The EBITDA margin for FY24 stands at 22.37% versus 20.41% in FY23, registering a change of 196 basis points. Profit after tax for FY24 stands at 69 crores against 43 crores in FY23, registering a growth of 62% on a year-on-year basis. The PAT margin for FY24 stands at 13.54% against 10.89% in FY23. Net worth of the company has increased from 245 crores in FY23 to 323 crores in FY24, registering a growth of 31%. Also, when we now we'll just talk about the key operating highlights for the quarter. In the quarter, the company achieved sales bookings of 759 units, equivalent to 6.49 lakh square feet of area, amounting to 404 crores. So this is one of the highest numbers that we have achieved in a particular quarter. Also, the average price in the quarter was 6,237 rupees per square foot. So that indicates that the affordable mid-income and premium housing contribution has been there across the total sales. The collection for Q4 FY24 stood at 129.5 crores. This financial year, we also achieved record sales bookings of 1,755 units, equivalent to 15.49 lakh square feet of area, which was valued at 970 crores. We recorded total collections of 503 crores. In terms of distribution by value for the sales done, 30% of the sales happened in the affordable housing segment, 50% of the sales was part of the mid-income housing segment, and 20% of the sales was part of the premium housing segment for this financial year. This financial year has also been a highlight for our business development activities. We have added approximately 2,435 crores of new business which have received approvals, and the launches for these projects are lined up in phase-wise manner in FY25. And just to speak something about the company and the market scenario, we've seen demand for residential homes increase in the quarter, and a price hike of up to 7% was achieved in the financial year across all the sites. And obviously the infra projects such as the Navi Mumbai Metro and the Atal Setu were inaugurated in this financial year, which will see a good uprise in the markets going forward. Land prices have doubled in majority of the micro markets over the last 2 years. Also FY25, we are expecting that the Navi Mumbai International Airport gets the Terminal 1 inaugurated by March 2025. We did a few new phase launches in FY24 at Arihant Aspire and witnessed a tremendous response. We also launched Arihant Adarsh in the month of March, where we were able to sell 145 units till March, and the momentum is continuing as we speak. Detailed list of the projects to be launched have been laid out on page 14 of the IR presentation, wherein we have indicated the tentative launches for the first half of FY25. We have received commencement certificates for World Villas at Chowk, Arihant Avanti at Shilpata, and Arihant 7 Anayaka at Taloja in the FY24, and the sales of these projects would begin in FY25. With the widest geographical spread and variety of products from 1 BHK to villas, we have positioned ourselves as one of the most unique developers in Navi Mumbai and MMR region with respect to the product mix, ticket sizes, and the multiple geographies we cater to. With this, I will now open the floor for question and answers. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from the line of Jojo Shaju from Alpha Invesco Research Services. Please go ahead, sir.
Yeah, thanks for this opportunity, sir. So you have reported 970 crores pre-sales for this year, but I believe most of the this is the total pre-sales coming from the projects. But in most of the projects, you have only 60% economic interest. So out of this 970 crores, what would be the Arihant share of pre-sales?
So this is spread across the entire company, so including the subsidiaries. So I mean, we don't account 60% separately when we record our sales. But to give you a ballpark figure, I think something around 600 crores or 650 crores will be from the subsidiary companies which have performed in this financial year.
660 from subsidiary companies. Okay. And sir, the previous calls you have guided for 30% pre-sales growth for the next two financial years. So roughly pre-sales of 1,300 crores and 1,650 crores for financial year FY25 and 26. So are you still holding on to this guidance? How do you see the demand of it now?
So we are confident of this guidance, and our target for pre-sales is 1,300 crores for FY25. Obviously, this is a conservative number. There could be some surprises, but yeah, we are holding on to our guidance for this year as well as the year going forward.
Okay. And sir, coming to your sales strategy, do you have your entire team in-house for the sales team, or are you associated with any opt-up companies for your project sales?
Today, we have a sales team of approximately 285 members, and everything is managed in-house with respect to the pre-sales, the sales, and the post-sales. So we don't have any tie-ups with any mandate companies as of date.
Okay, sir. Thank you. And that's from my side.
Thank you, sir. Our next question comes from the line of Rutul Shah from Anubhuti Advisors LLP. Please go ahead, sir.
Yeah, thank you. Am I audible?
Yes.
Yeah. Congrats for a great set of numbers for the FY24. My question is respect to the GDV that we have mentioned in our press release. So 8,800 crore is the number that is the GDV for the current projects that are in pipeline. I just wanted to know whether this GDV is for the total projects or it is only for the share of Arihant. Like we do JDA, so this 8,800 crore is for combined or only our share of that project?
No, so this GDV is obviously total of the projects that we are developing, and whatever area we mention to wherever we have JV, like the Shilpata, Arihant Avanti or Arihant Alishan, we mention the area which is belonging to us for our revenue records. So we don't add the landowner portion in the presentations or in the projected revenues. So whatever incomes are to come are being showcased. Whatever incomes are to come to the company at the company levels, the company at the subsidiaries, those are being showcased in the presentation.
So this 800 crore is purely of Arihant, right? And the total amount might be like 10,000, 11,000 crores.
Maybe. I am not concerned about the landowner's revenue potential.
Second question is with respect to the club membership that we have announced some time back. So just wanted to understand how the economics of this club would be there. So like what would be the legal form of that club first? Second, when we would be selling the membership to the client, whether that money would be remain in the club itself or it would be coming back to Arihant Superstructure as a reimbursement or something like that. If you can better clarify on the economics that how it will work. So we have initially given 250 crore as the capex, but is it capex to be done by the company and we might get some reimbursement in the form of membership fees? How that economics will work?
Well, hi, Ashok Sajan here. The Club 10 Gymkhana is an asset to the company on an annuity-based income from the club. So it is an asset-building exercise where generally what we have seen is like Gymkhanas are never built by an individual in the city of Mumbai. The Bombay Gymkhana, the MCA Gymkhana, the Wellington Gymkhanas are all which were managed and built by some trust, and hence the membership and the format was of an body incorporate and the membership is to rely with the individual entity of a trust. Here, the property is of company, and it provides up an living standard and living platform of lifestyle. So the income and expenditure all lies with Arihant Superstructures Ltd, as Club 10 Gymkhana is not into any separate entity. So all the income would be of the company, and all the expenses towards asset building would be of the company, which would have its own valuation in the days to come as an asset. The format of membership is of for a period of what schemes right now are for life membership, and the business plan is there for its monthly inflow and outflows. So yes, the membership fees would be and part of income as an project, like an income in any other project.
So basically, just wanted to know, say, if we are selling a membership at say 10 lakh rupees, so that 10 lakh rupees would somehow be like a reimbursement from that 250 crores, or that will remain in that different SPV that we are
you can tell it is an reimbursement to the investments. So word reimbursement is not the right word. It is an income to the investments.
Okay, got it. Then
Gymkhana, the cost is valued around 125-150 crore rupees of an Gymkhana. It is not 250 crores of investment. The company's total investment would be to a tune of budgeted 150 crores.
Got it. And sir, when we are saying that the member, so we are giving lifetime membership to the client, so typically it is normally it happens that when there is a club and there is a member, lifetime member added to that club, they are also a kind of owners, to that entity for which they are buying the membership.
That is what I told you.
Yeah.
Excuse me, but that is what I told you. It is not a trust. They are not the members. They are not the owners. Here the ownership 100% lies with the company only. We can get back to you from our sales team details about it, and going forward about the strategies of each individual nitty-gritties of sales, etc. We can focus on the company's numbers and performances.
Thank you so much. That's it from my side.
कभी भी आ जाइएगा, we'll explain you everything. No issues. यहाँ कोई ट्रस्ट मैनेजिंग कमेटी इलेक्शंस नहीं है. ये 100% ओनरशिप हो गया ना ESL का. कंपनी की ओनरशिप का प्रॉपर्टी है. They are providing you lifestyle opportunities where there are going to be income. It's so simple as that.
Okay, got it, sir. Thank you so much.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from the line of Ameya Gaude, an individual investor. Please go ahead, ma'am.
Hello. Hello.
Yeah, please come in.
Can you just explain us how the joint development and joint venture partnership are structured and operationalized by the company?
See, whenever a land is been brought by a landowner and where the company does not or the entity does not pay for land, that is called as joint development, where the landowner gets either in the form of area or in form of revenue sharing. We as a company, whatever joint development we have entered are in terms of areas. We have yet not entered into any revenue sharing. Joint venture is where two people come into an entity at the inception of the project and infuse capital and buy the land. So that is what the subsidiaries joint ventures are there, where two groups came in, they put in capital to buy the lands. So the lands are owned by the entity which is a joint venture entity. So our subsidiaries can be termed as joint ventures. A few of the projects like Arihant Alishan, Arihant Aloki, Arihant Avanti are three which are joint development where company has not paid for land payments, but in lieu of it, it is sharing with the buildable areas.
Ameya's line connected, sir. Shall we move on to the next question?
Yes.
Our next question comes from the line of Vidisha Shetty, an individual investor. Please go ahead.
Hello, am I audible?
Yeah, welcome.
Hi, good morning. So, my question is that what is the company's strategy related to the land acquisition and the joint ventures?
We are open to both. Wherever we find out that the capex towards buying of land is less, we buy the lands. Wherever we find out developed and matured markets, we do redevelopments, we do joint ventures where we don't pay for the lands. So we are open to it, and going forward, as today, we see that at least a mix of 75% plus are where we own the land as an owner of 100%, and 20 to 25% of the projects are into asset-light model, which is called as joint developments. So the business development, which is being looked again at 20 to 25% of CAGR this year also, and where the company's acreage of land from 200 acres would be reaching up to 300 acres. So we see that given any opportunity which gives EBITDAs and which gives the profitability, and where we are confident of executing and selling the project, we'll go forward with it.
Okay, got it. Thank you so much.
Thank you, sir. Our next question comes from Himang Tugli from Monarch Group. Please go ahead.
Hello. Yeah. Good morning, and congratulations on very strong set of numbers from Arihant team. So two questions. One is the strong revenue growth and guidance going forward is quite encouraging. Can you elaborate further on what will be the key factors that will lead to this 25-30% growth that you have guided? We do understand that you are one of the leading players in MMR Navi Mumbai region, and the government focuses there. Along with that, what is our strategy to tap the market going forward? That is number one. The second is on the EBITDA margin. Now, would you like to guide some ballpark number on the EBITDA margin going forward? We have seen a good improvement in EBITDA margin from 21.43 to 22.37, and I do understand that we have moved from affordable housing to mid-income to high income, and that percentage has changed. Would you further help us to understand how would FY25 look on the percentage terms in all the three segments? What is? Yeah.
What was the first one?
On the revenue, what will be the key factors?
What was your first one? What was your first one?
What will be the key factors that will lead to a strong revenue growth?
Yeah. So the company had a total unsold inventory of from the ongoing projects at the start of the year at 1423 at 6,500 crores, and in this financial year, last financial year, we have added up 2,300 crores as new projects. So what we see numbers are from the ongoing projects, that is from the 6,500 crores platter. The 2,300 crore new projects, that is Arihant Villas at Chowk, Arihant Avanti, a larger project at Chilpata, Arihant Seven Anaika at Taloja, Arihant Adarsh at Taloja, new phases of Arihant Aloki at Karjat, new phases of Arihant Aspire at Falaspe, and new phase of Arihant Anmol at Badlapur. So 7 projects we have got the commencement certificate in the last days of March and April, and which would be seeing up launches on month-on-month basis in this financial year. So in addition to the ongoing projects which has contributed to the sales number of 970 crores of the year under 24, for the year under 25, it would be there would be an infusion of sales from these numbers, and hence we find it out very much confident that given this humongous size of new projects being coming into the market and the launch, we would be able to do up the sales and the ongoing concern of 30% growth. With respect to EBITDAs, the older projects which already had started off in the year 10-12, that today had an EBITDA of around 10 to 12, 13%. After the Atal Setu and MTHL link, we find that there would be a little spurt into it. The new projects we work with an EBITDA of 30 to 35%. Blended, we are today getting at 22%, which would inch up year-on-year basis as we are seeing it from the last 3 years. So the major of the projects which have been acquired and which are going acquisition now, we eye for an EBITDA of around 30% plus, which would mean an PAT of something around 20% plus. And with respect to the mix, we have been having all the category of product lines. So out of the total 8,800 crores in terms of value terms, not in terms of square feet, almost 35% of the value of the sales are in the affordable housing, which means 50 lakhs and below and flat size, and 35% of the total sales value is from mid-income group, which means from 50 lakhs to 1.5 crore, 2 crores, and 30% is from the premium segment, which is above 1.5 crore to 3.5 crores. So we have a presence in each of the 3 segments equally in terms of middle income group, luxury, as well as affordable. In terms of square footage, the ratios are different, and we have a spread of 17 projects to cater to these 8,800 crores of sales to be done, which would get revenue recognition in the coming 5 years, an average of 5 years of time. And this de-risks ourselves being spread out and having market share across the MMR, right from Thane up to Panvel.
Right. So one more question, if I can ask. On the cash flow front, on the operation side, you see cash flows getting generated, a healthy cash flow being generated this year, FY25, which will help us to acquire land and things like that.
Majorly, the acquisition of free cash flows would get utilized in the self projects as the projects are of bigger size. Though the cash flows also has increased up in every year-on-year basis, and we see that that would also we would seeing up the same type of 30% growth in terms of collections also. But the project sizes would consume the free cash flows also, or the increased cash flows. There may be 10% of cash flows of the total cash flows which can be utilized for land payments. Rest and acquisitions or business development will have to source funds for itself. And we have great opportunities in this region. Able to Arihant being the leading developer, the marquee developer, has the best business development proposals on the tables, on the office, and we are able to still acquire with the resources and with the generation of funds which we can do on the project acquisition business.
Thank you, sir. That was useful. I'll join the queue.
Thank you, sir. Our next question comes from the line of Manan Shah from MoneyBee. Please go ahead.
Yeah, hi. Am I audible?
Yeah.
Yeah, hi. Thanks for the opportunity. I was not able to reconcile the pre-sales numbers, what we have been reported quarterly basis and versus what has been reported on an annual basis? Because in H1 we reported around 466 crores of pre-sales, and in Q3 we reported around 250 crores of pre-sales. And if you are saying on an annual basis you reported 970 crores, then that does not add up for the Q4 number of 404 crores.
Yeah, so we have also factored in the cancellations which have happened in Q2 or Q3, and have been the numbers of 970 crores are net after the cancellations recorded till 31st March. So that is why.
Okay, so in that that would mean that there have been cancellations of almost 150 crores. This is purely based on what has been reported on a quarterly basis.
Yes, there we have cancellations of between 10 to 15% across all the sites generally, and that is a general trend in the high volume sales markets and high volume businesses also across all the developers.
Okay, and generally, what is the primary reason for these cancellations?
At our end, I think a majority of the cancellations are due to the loan eligibility. So the clients are unable to reach up to the loan eligibility criteria, which lead to the cancellations.
Okay, understood. My next question was on the collections. A 130 crore collection against 400 crore pre-sales would translate into an efficiency of almost just 32% versus in the previous quarters we have been reporting 40-50% sort of an efficiency. So what led to a lower collection efficiency?
This quarter, Q4, we had launched two projects, Arihant Aspire, one tower, which was Catalina, and Arihant Adarsh. So the launches happened in the month of Feb and March. So the collections are going to come from Q1 onwards because it is a minimum, I would say, 60 to 90-day tenure for the customer to book and then get the sanctions done and then for the disbursements to happen. So at our end, we have a cycle which ranges from, you can say, 30 days to 120 days, depending on the customer's profile and criteria.
Okay.
Plus, it comes in portions. We don't ask for 50% on day one. It comes in schedules as per the construction progress.
No, I understand, but it would also our collection would also be from our earlier sales, right? From earlier quarters. So ideally, the velocity of collection also should keep going up, right? As we keep constructing and as the project progresses.
Yes. So the construction of the new launches done in Q4 is taking up shape in this quarter onwards, Q1 onwards. And I think for this financial year, we are targeting collections to be in the range of 650 to 700 crores across the entire financial year.
Understood. My next question was on the launch pipeline. So as I was just reconciling, we've pushed a couple of launches by a quarter or so. So what is the cause of the delay or pushing back the launches, if I may ask?
So yeah, the World Villa were initially lined up for Q4, but the approvals have been received in the end of March and mid of April. So now we are just processing the RERA registration, and we should have those in hand by, say, 15th of June. And World Villas is scheduled for launch in the end of June or mid of June, because that's when the monsoon season kicks in and that area has more footfalls during that peak season. Arihant Avanti is scheduled to be launched in somewhere around Q2. So we have to keep a buffer because RERA registrations take anywhere between 15 to 30 days nowadays.
Okay, and in World Villas, we've also increased the launch size, right? Earlier, we were planning a 75 unit launch versus now around a 180 unit launch.
Yes. So we want to offer more inventory because many people have their own choices, their own criteria when it comes to the property selection. And since it's a very large layout, we don't want people to go back just for the reasons that this inventory is not opened yet and will come after 2 years. So we're keeping one of the good inventories also open today so that we can capitalize on that, and that will help on the progress of the project.
Okay, thanks. I'll get back in the queue.
Thank you, sir. Our next question comes from the line of Anurag Agarwal from Agarwal Analytical Investments. Please go ahead.
Hi, sir. I wanted one clarity. In the related party transaction table, we have taken an unsecured loan by the company, whereas the particular shows the director's name. So I was a bit confused. Could you just throw some light on that?
So which company are you referring to?
It's the consolidated related party transaction. It shows Ashok Chajjar and Parth Ashok Chajjar as directors and taken loan, but in the remarks column it is shown as unsecured loan taken by company.
Yeah, so the directors have put in their own funds as unsecured loans for the company. What's the confusion about?
Okay. I just wanted that clarity. Okay, got it.
That is how the acquisition happened for the project World Villas.
Got it. Apart from that, sir, so apart from that, I wanted to also understand, like after what would be the land bank remaining with us, for which we haven't planned any projects.
Most of them are already done, not unutilized or unplanned lands or something to an size of 15 to 20 acres only.
Okay, got it. That's it from my end. Thank you, sir.
Thank you, sir. Our next question comes from the line of Girish Gulati, an individual investor. Please go ahead.
Congratulations for great set of numbers. So just wanted to ask one thing, like what separates Arihant from the rest of the players, because we are in the league where our ASP is not very high, like close to 5,000-6,000 rupees per square feet. But at the same time, our profitability is very, very high compared to similar players. And what helps us in keeping such kind of high profitability margins and such kind of capital efficiency, if you can throw some light on that. Thank you.
So, vis-a-vis comparatively, Girishi, that is what the company has been doing it up since last whole 1 decade in terms of time efficiency, which reduces the administration cost, the contracts efficiency, which are awarded at very accurate prices, the technical specifications, which where the best of the quality is achieved with the best document material also in terms of purchases with the brand value. And that is what we have been lauding, that we are very consistent. We have a stable progress of businesses. The company has been able to bring in new projects every quarter of time of every year of basis, and also do construction as well as give deliveries. So the efficiency is due to the good man resources and the people with the office, and they have been able to put in more than 100%, and that helps out in terms of getting the margins high. The major aspect also happens up in terms of land cost. Our land cost, that is where the real zinc thing is, that our acquisition prices have been far very accurate, very low cost, which has helped the company to even go through bad phases where even the finance cost due to capitalization also has not disturbed the viability of the project at every one given day in the whole last 1 decade also. And this is all put together in terms of monitoring, in terms of hard work, etc., that we have been able to generate better margins, better profits, when given an average selling price of 6,500 as on this year also. And going forward also, we would be able to do it, because that is the culture. the whole of the office is under that culture of spending right and not spending high.
Okay. Okay. And so what would be the interest outgo in this financial year, current financial year, roughly?
Total in the coming financial year or
the coming financial year, FY25, sir.
FY25, see, the institutional funds would take it around 30 to 35 crores as cash outflows. The promoters fund may take out to another 20 crore rupees as financial outgoes. So we see that from cash flows it would be 50 crore rupees as financial outgoes, though the unsecured loans where interest would not be paid and still be accrued to the accounts would range to another 20-25 crores. So we see an 70-75 crore rupees as an interest in the books of account in this financial year. But cash flows, we are good that the arrangement with the institutions are where we are having a moratorium period also.
Okay. But anything further, sir, on getting company to the next league where we get some funds via another round of preferential in the company and getting some more projects and kickstarting them as soon as possible. Is there anything on cards over there as well?
As an aspiration to grow and the business plan and the projection and the intent to have retain the position of the highest numbers, top position in the region, the business development has to take place on a better way, and undoubtedly for real estate every project requires and capital, and hence any capital which comes in will help out the growth of the company. As we have seen that the company started off with just 40 crore rupees as paid up capital in the year 2010, and thereon till today with a net worth of around 325 crore rupees in 10 years, in spite of around 350 to 375 crore rupees of interest payments. So that tells that from 40 crores of initial seed capital, we could do up an EBITDAs of 600 crores in the 10 years. So going forward also in the same style and way we see opportunities, we see things coming up to the company, and given the ease of finance, yes, so we are open to it at an appropriate time in terms of inviting investors to be a part of the company.
But thank you very much, sir, for the detailed answer, and all the best. And as a shareholder, it is very heartening to see such a capital efficiency in the company and to see such a good numbers, and wishing all the best for the future. Thank you to the board as well. Thank you.
Thank you, Giriji.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from the line of Rahil Shah from Crown Capital. Please go ahead.
Yes, hi, sir. Good morning. So just revisiting on our guidance, can you please repeat it for the sake of clearing the confusion? So are we just guiding 30% growth in pre-sales, or you're also saying the same for the revenue? So what is the outlook there? And you explain margins for different segments, but so on a blended basis, what can you expect for FY25, sir?
See, we are expecting a growth of 25 to 30% across the pre-sales as well as the revenues, EBITDAs and PAT level. So accordingly, we expect the margins of EBITDA margins as well as PAT margins to increase along with.
You expect the margins to increase by that number, not the absolute?
No, even the absolute numbers would be increasing. The revenues should be increasing, the EBITDA should be increasing, the PAT also should be increasing by 30%.
Okay. And this will be led by because your attention is equal among the segments, or you have a specific focus on a certain segment which will drive, let's say premium will drive the margins. Is it something like that?
Yeah, so premium is going to contribute more going forward to the revenues and the EBITDAs. So that is going to lead to an increase in the margin, which will also lead to the growth. So premium housing is obviously on the charts for this financial year, which is going to contribute more to the P&L.
Okay, got it. All right, thank you and all the best.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. There are no further questions for the day. Now I hand over the floor to the management for closing comments.
Yeah. Thank you everyone for taking time out to join this call, and we always learn a lot with the discussions that we have over here, and we are keen to interact with you all separately as well. Also, if anybody has more questions, we can get connected and you can contact our investor relations team, Valorem Advisors, or contact us directly also in the finance department, and we'll be happy to connect. Thank you so much.
Thank you so much. Members of the management, ladies and gentlemen, on behalf of Ventura Securities, that concludes this conference. Thank you for joining us, and you may all disconnect your lines now. Thank you so much.